Welcome to ETM Analytics' first take of the markets. I'm joined as always by Director George Glenos. George, there's no way around it. We have to talk about the elephant in the Oval Office, last week's meeting between Ramaphosa and his delegation and US Donald Trump and his delegation. It made for uncomfortable viewing. I think everyone can agree. It was uncomfortable to watch how it plays out. And you know, you and myself have spoken about this, and I've been flip-flopping back and forth on my thoughts on it and how it went. And were there details mentioned by the Trump administration that were incorrect? Yes. But I think what they did get right, and this is the reason why I feel uncomfortable about this topic, is that perhaps the murders and violence that we have become so desensitized to really was just put on display for the whole world to see, and kind of giving us a realization that, you know, we have been living with something that perhaps other people find strange and other people find, not workable. And if we're honest, there's no clear strategy to address crime in South Africa. There's never been one, really. And given that, then investors, whether US, European, or anywhere else, are well within their rights to ask uncomfortable questions.
Yeah, exactly that. I think you've summed it up nicely, and I think there's, you can take it a lot further than that, because crime was one aspect of it, but they brought up the topic of racial policies, or policies that are racially based, as another topic. Starlink obviously came up for discussion, because it would be a great technological addition to South Africa, and yet the reason why it's not here is because Elon Musk refuses to part with part of his company just because of some race-based laws, which, in his opinion, he had nothing to do with, nor feels that he needs to make right on. So, if that's the rules of the game and that's the rules of the country, then he's just not going to participate. And that's just one example. I can tell you that there are countless such examples, and one wonders how much South Africa has potentially lost through the course of time by laws like this that have discouraged foreign capital and investment. So I think it obviously, the genocide thing was off center, it was off target, but and I think there was an attempt made to try and correct that perception, and certainly appears to be the case in many media outlets around the world. But the point was made that there is violence in South Africa, and you talk about no clear strategy of tackling violence. Well, I tell you, the one good way of doing it would be to get your economy to grow and to get people employed. And when you have less desperate households, you have lower levels of crime, and so things tend to repair themselves that way. So you do have to come back to the fact that ANC policy over the past 30 years has let South Africa down badly. We have deindustrialized as a country. We haven't kept up with employment trends at all. As a result of that, we've got a lot of social dysfunction within our society and within our population, and of course it does manifest, at least in some parts, in rampant crime, and some people may feel that it is targeting a particular group just by virtue of the fact that the whites, for example, will see themselves as a minority, yet they still have a lot of policies that are aimed against them. And so, whilst that crime is taking place and has affected that portion of the population, so it's going to be raised. And we know that this was raised to Trump many months prior to this meeting. And I felt a little bit uncomfortable at the response, to be honest. I think there wasn't a good enough response in the Oval Office, but at least the point was raised. And Ilse Marie, if I have a look at the markets and the way things have responded, clearly the financial markets weren't too upset with the outcome of that meeting, or they would have responded negatively. But bond yields didn't rise, and the rand cracked on and appreciated even further. So maybe there's some appreciation that when you raise these topics openly and you start to discuss them in a way that starts to draw attention and focus on the nub of the issue, that perhaps that's when you start to make real progress in fixing the problem. So yeah, there were parts of me that sat back and thought, well, you reap what you sow. You do a bad job in running the economy, then you need to face the consequences of it. And this is just one. It's a small consequence in the broader scheme of things. The bigger consequence is borne by the many millions of people in South Africa that remain unemployed, and that's the ultimate problem. In this country is that our unemployment is too high. Our economic policies have let us down. And no matter how you choose to peel this onion, that is going to be at the center of it time and time and time and time again. So, yeah, we can talk about race issues. We can talk about those policies. We can talk about all of those things. But ultimately, it comes down to an underperforming economy that can't employ people. Desperation in many quarters manifests in ugly ways.
Well, I suppose now, we are waiting for what the talks behind closed doors would have brought us. Rumor has it that it was cordial. So we might not see a constructive full deal yet or any announcements on tariffs or anything else, but at least the ice has been broken. And like I said, from what we can hear from what happened, it went well. So there was this whole show and tell in the Oval Office, but let's hope we have something more concrete to move on from, and that there's some reset in that relations, and that's ultimately what Ramaphosa was after. So we'll wait for that finality. But to domestic matters for this week, of course, Lesetja Kganyago and the Reserve Bank will be in the spotlight as they make their next decision on interest rates. And you ran an interesting poll within ETM asking what do we expect on Wednesday, and the results were conflicting.
Yeah, I mean, it was 50-50, split smack down the middle as to whether they were going to cut or not. And I think that's going to mirror what happens in the Reserve Bank as well. I wouldn't be surprised if it was something along those lines, although they can't have a completely 50-50 split vote. It's going to tilt one way or another. It depends what they choose to prioritize. If they prioritize current disinflationary type trends, then there's a strong argument to be made for reducing interest rates. After all, we're below the lower limit of the 3 to 6% target range. If, however, you are looking at the comments recently by Masondo, and then last week Fundi Trizibana from the Reserve Bank indicated that there were discussions and talks, and there would be an announcement made fairly soon on the topic of inflation targeting. And I know firsthand that the governor favors a lower target. We know that emerging markets of a similar status are targeting inflation rates closer to 3%. Then you know that there's a window of opportunity right now with inflation at 2.8% for the Reserve Bank to shift to a new inflation targeting regime, and for it to happen in a fairly seamless manner, which would change things for the SARB to the extent that, well, now they're going to be they're going to be tasked with keeping inflation at or around that 3% rate for longer, in which case you could argue that current policy is therefore appropriate already. It doesn't need to be eased that much further. You're only 0.2 below the 3% target. So really, is there room under that circumstance to cut rates? Well, when you consider the full effects of the tariffs are not yet understood, that we are going through the trough of inflation at the moment, you could quite comfortably build the argument for, well, if you're anticipating inflation targeting to target 3%, and you're kind of there or thereabouts, and that there are upside risks to inflation from these tariffs, etc., then you'd probably favor just remaining on hold for at least another meeting or two, waiting for the dust to settle, waiting for the announcement on inflation targeting so that we all understand the policy properly, and then taking it from there. It would be almost a little bit premature to go and cut interest rates now when you know that an inflation targeting change is going to come and that it's going to favor a lower inflation target, only to be forced to jack up interest rates shortly thereafter if inflation starts to move back above 3%. So, if you had to ask me, I'm defaulting towards unchanged, but I understand the arguments for and against. At this stage of the game, as I said, it depends on what you're prioritizing. If you're prioritizing current inflation well, and you aren't going to take a potential change in the inflation target into consideration, then you can argue for a cut. Absolutely, at 25 basis points on Thursday. I mean, lots of us would enjoy that, but if you're thinking about it longer term and strategically, and you do believe that they're going to drop it to 3%, then not.
Yeah, and a lower inflation target will just really benefit the poor. The trade unions might not be too happy with it because that might influence how they enter into negotiations for wage agreements. But other than that, not a bad policy move, and will align us with some of our EM peers as well, I don't think there's a lot of countries with a target band necessarily. They tend to have these exact figures. So it is a good catch up for South Africa if we do move that way. Lesetja Kganyago is known to be conservative in his move, so who knows? He might disagree with you, George, and hold back, but I'm pretty sure he's going to face some flack if the whole MPC decides to keep rates unchanged. So, but we can check in again on that next week. George, thank you very much, and we will chat again soon.